This is not another episode of me documenting the day-to-day process that I'm taking. Wait, it is, because in this video, I'm going to be breaking down the entire process that I'm following to achieve long-term consistency in the financial market. And the reason that I'm doing this video is because I uploaded a post last night, and I won't have a trade recap video out until Wednesday because I'm not trading before PPI and CPI. So tomorrow and Tuesday, what kind of content do you want me to make? So I asked you guys, and you said that you would like a process breakdown. Now, Raw Talk got the same amount of votes, but I'm just going to go ahead and do a process breakdown because I've had so many people ask me to do a video on this, and I haven't done it. So here you go. This is it. My processes start to finish in everything that I do to the best of my ability. Now, this is going to be like the same style of content that I usually do, completely raw, unedited. So I'm going to cover it to the best of my ability. But in order for me to explain to you what my process contains, we have to understand the 5 stages of trader development. Now on here, you're only going to see stages 1 through 3 because this is where I'm at right now. I believe I'm in a mix of stage 2 and stage 3, kind of somewhere in the middle of both. But at the same time, I also dab my toes into stage 4 because I do have playbooks and a process that I'm consistently repeating. And now I'm working on risk. But if you really want to know the 5 stages of trader development, this is the video for you guys to watch. If you want the full breakdown on the 5 stages of trader development, you need to watch this video right here. And I'm telling you guys, this video absolutely turned my trading around, and it gave me a blueprint to follow. And guess who it's from? It's from Umar Ashraf. I'm sure you guys know him. He's one of the top dogs in the day trading space. As I'm sure you know, this guy is a genius. He has laid out a process in this video from start to finish that you can apply right now, starting today, to figure out exactly where you're at in your trading journey and the next moves you need to make. So from this video, I've watched it, I believe, 3 times now. I actually went back and rewatched it this morning because I needed a refresher on where I'm at in my journey right now. But this is how I've created all the systems and the processes that I have. So let's start with stage 1 and explain the importance of actually establishing a process. All these successful traders, they tell you need a process. What do they mean by that? What do they mean by you need a process that you can consistently repeat? The process is going to be the manual work and the manual labor that you put in on a day-to-day basis that is going to produce trade data. You can see that under the title of process right here. I have in parentheses trade data. So the process that you're taking is the manual work that you're putting in on a day-to-day basis that produces trade data. And from that trade data, you can go back and connect the dots, basically. You're going to go back and be able to analyze your thought process from what you planned that morning, how you plan to approach the market versus what you actually did during the live trading session, and then reflecting on that in post-market analysis. So it's a process that you're following, and it starts with pre-market plan, goes to live trading, and then goes to post-market analysis. So let me just run through these notes real quick. So this is non-negotiable. This is something that you do throughout your entire trading career. And if you're not doing this, you're probably experiencing a cycle of boom and bust where you're experiencing a lot of successes, but also a lot of failures because you're not able to connect the dots on where you're going wrong. Folks, if you're missing this part, the actual process of your trading system, how are you supposed to know where you're going wrong and how you're going to get better? This is absolutely essential. So as you go through stages 1 through 5, these processes get more refined and repeatable, but this is something that you do in every stage. Everything done in stage 1 is done through all stages. It is the process. It does not stop. These processes just become more defined and easily repeatable. So if we walk through this little flow chart that I've created from that video that I just showed you guys, it starts with your pre-market game plan, right? Before you start the session, you have a game plan that approaches that particular session. The first thing that you're probably going to reference is the economic calendar. You have to know events that have moved the market last week and events that will potentially move the market this week. You need to get a read on sentiment. What happened last week and what is happening this week. And then what do you do after that? You're obviously going to set your key points and levels and then frame a bias for the day. Now, an important thing to note is that you are going to get this wrong so many times. You will get this wrong over and over and over and over again. You will frame the incorrect analysis many times over. And I still do this. But the only reason that I have refined a market approach that is extremely specific, and now I know exactly the things that I look for to frame a bias for the day, is because I've done this exact process right here where I come to the market, I note my pre-market game plan, I actually write down what my bias is for that day, and then I reflect on it at the end of the session and note where I went right and where I went wrong. That's the only way you can get better, guys. If you are not doing this, if you come to the market with a bias, but you're not writing it down or not reflecting on that on the end of the day, how are you going to know why you were wrong? And how are you going to get better from that? You can't. It's impossible. So it's going to start with your pre-market game plan. And then from there, intraday, your actual thought process going on in the live trading session. So your live trading notes, your recording, which can be a screen recording, which is what I do, right? In all my breakdowns, I show you guys a recording that I have, right? I have a folder right here, sessions, and I literally record all of my trading sessions through OBS. It's a free recording software. You can download it. Anybody can use it. You can literally sit here and talk over your recordings. You can talk to yourself and let you know what you're thinking, what your thought process is as you're interpreting the live market data. Or you can type it out, which is what I do personally. And I used to write it down, but switching to a typing format and a template that I follow in TradeZella has allowed me to systemize everything and make it more clean and more efficient. And it allows me to easily reference exactly what I was thinking during that trading session. I would keep my notes written down on this paper tablet that I have. I would show you, but I don't think it's necessary. And over time, my process got more and more refined, and eventually it led me to the point where I'm now typing everything out. So basically what the live trading notes are is just a check-in. So every 15 or 5 minutes, write down and communicate with yourself. What do I see? What do I think? So do 5-minute check-ins if you're in drawdown or really struggling, and do 15-minute check-ins regularly, like normal trading sessions. So this is your live trading notes, your thought process intraday through the session, and you will see results from this instantly. The second I started doing this, what I'm actually thinking intraday becomes a whole lot more clear to me. It becomes a whole lot more systemized. It's less random, right? I can take a note of how I'm feeling emotionally. There's so many benefits to applying the check-ins that you will literally feel instantly. So if you're not doing this, I instantly recommend that you make this change. So I'm going to walk you guys through the steps of the process, the manual work that produces your trade data, and then I'm going to show you what my process looks like in TradeZella. And then the third part of the process is simply your post-market analysis. So you're going to study your pre-market game plan versus how price actually played out and the setup that was presented. This allows you to see your thinking process in the market. Like I said, this allows you to go back and connect the dots, because you could come to the market with a bullish bias, right? But somehow, some way intraday, you end up selling short twice and you stopped out on both those shorts and the market just ran against you and you got wrecked. Why does that happen? You have to be able to go back at the end of the session, look at your live trading notes, reference your live trading notes, and see how your thought process changed, or see how you perceive price as bearish in that moment, even though you came to the market with the bullish bias. This is where you're able to pick up on your mistakes and how you're analyzing the market, and where you're going right and where you're going wrong. So review what trades you were looking to take, how you executed that, what your execution looked like, and then analyze that from a thought process point of view. So the post-market analysis allows you to see why you deviated from your plan or how you took that trade that didn't make sense on the other side of the market. And this is going to produce good decision making. So let me read this right here. So if you intentionally do this every day, you'll get very in tune with the market and find many things that stick with you. Do the process right, do it consistently, and find things to take away from it. This is extremely important. So this is the data that you are getting from on a daily basis. You follow this process, 1, 2, 3, there's only 3 parts to it, and it's going to reveal to you a lot that you would never ever know had you not done this process. And then after that, you refine this data, and that's when you do your weekly and monthly review, which we'll also get into. So now we'll get into the actual systems and the processes that I've created in TradeZella. I wouldn't say systems or processes. It's just one system that I've built in TradeZella. And you guys have asked for this for a lot, so here we go. Here it is. Let's see if I can full screen this in a way. Okay, that's good. So, referencing the Miro board and the notes that I've taken, right? What's the first step? Pre-market game plan, okay? So, I've added on to this to kind of make it own. I've kind of made it unique to my own style, right? So the first thing that I ask myself is how I feel going into the trading day, because there could be things going on externally outside of the market that's going to influence my decision makings intraday. I'm also going to make a note of how I feel in terms of confidence, like how I feel about the read on price that day. Am I extremely confident in a bullish bias? Or am I lacking conviction in the market and I have no idea what it's going to do? And I feel like it could go up and at the same time it could go down. Well, from experience and from following the process, I know that's what leads to my bad trading sessions. But the only reason I can connect that dot is because I do this process right here. So in this example, right, I'm just noting how I feel about the probability of price trading in one direction today, which I was kind of indecisive on, right? So how I feel, that's the first thing that I'm asking myself. I'm just considering, literally taking into account how I feel emotionally, how I feel in terms of energy. Do I feel high energy? Do I feel a lack of focus? Do I feel a lot of brain fog? Did I not get a good amount of sleep? Is there something going on outside of trading that's going to affect my decision making intraday? This is extremely important. This is not something that I always did. If I go to other recent reviews, this wasn't there, but I added in this element because a huge constraint in my trading was a lack of conviction in the bias. So now I'm asking myself, how do I feel about that? How do I feel about that day? How do I feel internally? Extremely important. And then after that, the second thing that I'm considering is what is the draw on liquidity, which is just simply the level that I'm expecting the market to trade to for that session. If I can't confidently define this, I know it's not going to be a good trading session. And I only know that from experience of doing this process. So the first thing that I want to do is establish the draw, which is just one level that I'm confident that the market is going to draw to, and that's it. And then my bias for the day, referencing the notes, right? We establish a bias. We're going to note key points and levels and set a bias. My bias, from what I've come to, refining my process over time by doing this process right here, bias for me is 3 parts. The first one's going to be higher time frame narrative. So that's simply where I'm taking into account basically how the previous day's candle closed. If we go to the optimal intraday swing model, this is all the intricacies of my model right here, but this is how I arrive at higher time frame narrative right here. I take 4 things into consideration. The first thing going to be the development of the weekly range. If Monday does any of the following here, then I know what I can expect Tuesday, basically based on how that candle closed on the daily time frame. So Monday, for every day of the week, based on a certain outcome of how that candle painted or printed or how it behaved, I have an expectation of what the next trading day is going to do. So the development of the weekly range is the first thing that I'm going to consider. And then settlement, literally just how that candle closed on the daily time frame, tells me how the next one is likely to paint because of the concepts that I trade and the logic behind them. Settlement is a big thing to take into consideration. The third thing is going to be the economic calendar. Mentioning the notes, right? We have to look at the economic calendar and consider what events in recent history have moved the market, or which events have the potential to move the market. For example, right now, what's going on right now? It's PPI and CPI week. It's Monday today. There's no news driver. It's Tuesday tomorrow. There's also no news driver ahead of PPI and CPI. What does that mean the market? How is the market likely to behave around these events? Well, if there's no news driver on Monday and Tuesday before PPI and CPI, I know that the market's probably not going to make a move before these high impact events, right? So I'm not even going to trade them because I know these are going to be the lower probability trading days. So this goes into higher time frame narrative in my market approach. I really have to consider the economic calendar and how price is likely to move that day based on what is on the economic calendar, because the market's not going to move unless we get that injection of volatility. So because I've done this process over time, I literally have now eliminated not even trading on Mondays with no news driver all the time, because I know that that day presents conditions that are not favorable for my model at all. So what am I going to do? I'm not going to sit there and try to trade it every time it's there. I'm literally just going to completely eliminate it. Trading is about finding the constraints, identifying the constraints, and literally just eliminating them. If I know that historically my model does not perform well on Mondays with no news driver, why would I continue to put risk on those days? Just eliminate it. That's it. So that's why I didn't even trade today. And that's why I'm producing this video right now. So the last part of higher time frame narrative that I would consider, part number 4, would be the near term condition, which is basically just how the market is moving in the near term, right? So those are the things that I'm considering when I'm establishing a higher time frame narrative. And I'm coming up with an idea right there. And so market criteria is basically just how the market sets up in the overnight session and how it presents liquidity and inefficiency in the pre-market and overnight session. So I've created these market criteria that tend to repeat themselves, and I've basically just outlined a criteria for that, like what usually makes that up, what properties, what characteristics are in price when the market forms that certain kind of criteria. And I'm just making note of that because how the market sets up in the overnight and pre-market session is definitely going to be influential on what we can expect in the New York morning session at 9:30 at the open. So that's definitely something that I have to take into consideration. These are the things that I use for my pre-market approach. So higher time frame narrative, market criteria, and mixing those two together, blending those two ideas is going to give me a really good idea of how I can expect that daily candle to paint. And this is how I arrive at a bias. So then I have to ask myself, how is it going to get to the draw on liquidity? Like, what is my expectation for how price is going to deliver after 9:30? Which is just simply right here, right? And then the last thing, I have playbooks. You have to have playbooks. You have to have certain setups that repeat, that are basically just anomalies to you, just setups that you've seen play out so many times over and over and over again that it's something that you're comfortable with and easy executing on. For example, if I show you my bearish premium gap opening setup, you are going to see that it's literally the same thing that repeats over and over and over again. So it's just anomalies that repeat consistently. And because you've seen it so many times with your experience, now you're comfortable executing on it. You don't have a problem executing on it because you know what is likely to happen when those things in price are there. Like, for example, if I show you this playbook, this is examples of the bearish premium gap opening playbook, you're basically going to see the same kind of move in price happen over and over and over again, where we open near the high day, we have a gap up opening, and then we flush and close the gap. So it's basically the same thing, right? And these same kind of moves happen on the same narrative in the same market criteria. So that right there forms a playbook for me. This is my strongest playbook that I have, the one that I understand the most. This is the one that I've spent the most time studying, and it delivers very, very well. So that's the last thing that I mentioned in my market approach, my pre-market game plan. I like to call it a market approach, pre-market game plan, same thing, right? What am I looking for? That setup. Then I do a lot, okay? I do a lot because I want to know everything. I'm extremely analytical by nature. That's just how I am. I like to know all the details, and I like to know everything, which is why I have a lot of you guys telling me that I'm doing way too much, and I may be doing too much. But that's just how I am, and that's just how I operate. So on top of this, now this is really quick. This literally only takes 5 minutes. I just do a top-down analysis, not even analysis, because I've already gone through the charts and looking at the charts. I already know what I'm looking for based on higher time frame narrative, market criteria, and what I think is going to be the draw on liquidity. That's it. So from the weekly all the way down to the 15-minute, I'm just going to throw up little annotations on what I'm thinking of how the market should deliver based on each time frame, from the weekly all the way down to the 4-hour. For example, I'll just throw up a little annotation of what I see on the weekly time frame and how I expect today to trade based on that. I'll do the same thing for the daily. I'll do the same thing for the 4-hour. Now I have a little annotation system as well that I should probably also explain because it's a part of the process that I have. So anything that you see in this light red is going to be a higher time frame narrative. This part of my market approach, it's going to be higher time frame narrative. Anything in the light red is my higher time frame narrative. So I'm looking at the weekly time frame. I'm seeing how we have this large discount wick and how we've traded below it right here. And now we have a large discount wick that's forming on this weekly candle. So I'm still banking on the idea that price is going to complete this buy model. So then on the daily time frame, right? I'm getting my higher time frame narrative from the daily time frame. So the annotation on light red is going to be me explaining what I'm reading on the daily chart. So I'm noting that Wednesday closed indecisive, which tells me price is comfortable where it's at. I'm thinking it could still want to reach for Monday's high. So I'm noticing previous day settlement, right? If we go back to my mirror board, how to frame a buy day. If we look at settlement, reasons to be bullish based on previous day settlement. It closed. I guess I don't have that reason mentioned on here, but I think I have it right here. So let's see. Closes discount ray. Okay, I don't have it mentioned on here. I don't have it listed out here, I guess. Or maybe I just can't find it right now because there's a lot right here. But basically, if the previous day candle closes indecisive and tells me where it's comfortable, where it's at, then I'm not expecting a reversal. I'm not expecting the market to go lower. I'm expecting continuation in that move. So do the same thing on the 4 hour, right? Do the same thing on the hourly. Now the annotation in blue that I have right here is going to be a point of interest where I'm expecting the market to reverse. So the annotations of blue is basically just PD arrays that I'm anticipating a reversal to be framed off of. So I'm going to be watching how price trades in this PD array, this 1 hour gap right here, to see if it shows me signs of strength or weakness. And that's it. So in this case, you can see the little blue annotation there. Now my annotations yellow are basically just going to be market criteria, things that I'm noting about the market, how it's setting up to form market criteria, right? One of these. So it's a very intricate process that I have, but it's repeatable and I know how to use it, right? You might not know how to use it, but that's because it's my process and it's what I've cultivated and created over a lot of months of following this process and just keep refining it, keep refining it, keep refining it. And you're going to also develop your process on your own that only makes sense to you, right? This is just like completely and entirely unique to me and my style. And this is just how I read the market. That's it. And then here is part 2 of the process. Live trading notes. So you can do it, like I said earlier, in the fashion of screen recording, typing, or writing. For me, I like to type it out. Here, you can see that I did a 5-minute check-in. I like to do a 5-minute check-in in the first 5 minutes of market open. When it opens and the conditions are kind of not favorable, or maybe the market's doing something that's potentially an emotional trigger for me. Like in this case, the market basically did what I anticipated to do without offering me a means of getting on side, but it didn't actually deliver the objective that I was looking for. So I'm making note of that, right? And then I did a 15-minute check-in here at 9:45. So how the first 15-minute candle close tells me conditions are shit. Market is not as weak as it seems, right? Now, at the end of the day, this right here is part of the post-market analysis or the end of the session analysis where you just go back and you reflect on how you were thinking intraday, how that led to the decisions that you made intraday, and to connect the dots. When you're doing your review at the end of the day, you're reflecting from a thought process point of view, meaning you're looking at your thought process and you're analyzing how did my thought process lead to this action or this outcome, which is what I do every day. So when I do a thought process analysis, I'm thinking about what I was thinking in that moment and how it led to the decisions that I make to. So I did good by recognizing the manipulative conditions and doing nothing until the 10 o'clock driver transpired, because that's what I noted right here, right? So then I'm just making note of that. I did good by recognizing those manipulative conditions and doing nothing. And I was very patient, right? Just analyzing my behavior after the fact, after the session is over. And then in my reflection, this is where I break things down and kind of just get into the black and white of what I did right that day and what I did wrong that day. So do a little reflection of how I felt going into the day, which is just referencing back to how I felt in the pre-market portion of the template, right? How I feel, and then how that kind of affected my decision-making intraday. So I wasn't confident in either side of the market because it didn't necessarily assign with the criteria that I was looking for. A lot of reasons to anticipate unfavorable conditions. So that's just how I felt. Do a little reflection on that. Most of the times, this is a huge influence to how I actually traded for that trading session. And then the rules that are broken I follow, that's pretty self-explanatory, right? I have rules established for my trading system. Everything is laid out here in this mural board that I've created. All the rules that I have for myself, call it an operational policy, give it a cool name, you know, make it fun, make it unique, make it your own. So I have an engagement protocol, rules for engaging. I have risk rules and partial profit taking rules, right? So at the end of the session, I'm asking myself, did I follow these rules or did I break these rules? Reflecting on them. And then what did I learn? Now, like I said earlier, I do a lot and I tend to do more than what is probably usually required, but that's just how I am. I'm analytical and I literally have to extract everything that I possibly can. So literally in every single trading session, at the end of it, I am extremely motivated to get out everything that I possibly can learn from that session. Even if I never even reference these lessons ever again, when I sit down at the end of my week and I do my weekly review, all I have to do is take a quick look through these and pick out the best lesson that I learned from that day, the most important one, the one that I should probably carry with me into the future, and that's it. But because I'm literally learning everything, I'm just ingraining all these lessons in my mind. I'm getting the most that I possibly can from every session. I like to squeeze all the juice out of that lesson. I don't want a single drop left. I want all of it. I want all of it. And I do this especially on the days where I have big losing days, or I've had a big red day where I made a huge mistake and something went terribly wrong. I want to know everything. I want to know exactly why that went wrong, because that is where the most growth potential is. You're going to learn the most from your losing sessions. Your worst sessions are going to give you the best lessons. And that's how it is. So when I have a terrible session, I'm sitting here and I'm extracting everything that I possibly fucking can. And I'm not leaving one drop behind. Everything. And the same is true for a day where I did good. Like, for example, I had a pretty good session here, right? You can see how many different things that I learned from this one good session that I had. How many different lessons did I write down? 1, 2, 3, 4, 5, 6, 7, 8, 9 different lessons I extracted from this trading day. Now, am I going to remember every single thing that I've written down here? No. But subconsciously, I probably am, just because of this extra work that I'm doing and putting in. And at the end of my week, I'm going to go through my weekly review, reference this, and just take out the most important one, and that's it. That's it. And then, of course, what I did wrong and what I did right. So this section of the post-market review is really efficient because I can just take a quick look at this and know exactly what went wrong that session and what went right. So this part is definitely extremely important. Now, this right here is not where I'm trying to squeeze every bit of it, right, and type out a whole paragraph on what I did wrong. Here is just one simple bullet point. This is what I did wrong, and another simple bullet point, what I did right, right? So you can see kind of like the contrast where when I'm reflecting on what I learned, I'm trying to get everything out of it. When I'm asking myself what I did wrong and what I did right, I'm not typing out a whole paragraph on literally every little thing that I did wrong, just the main bullet point on the main reason why that session went wrong, and that's it. And the same thing for why I did right. Okay, so you see here, one bullet point, 2 bullet points. It's easy. And then this, it looks like I left out this part. Damn, man. The video where I'm revealing my process and I'm leaving things out. I'm just kidding. I do this every day. It's very rare that I skip these. If I skip these, it's not because I intentionally skipped it because I was like, oh, I'm just not going to do it today. It's because I literally just forgot about it. This is shit that I do every day without fail, except for the times I forget about it, of course. But what should be here on Thursday the 4th, I guess I just completely, sometimes I delete the screenshots. I take the screenshots and I forget to put them in, and I delete them before I do put them in. Then I have to go through my recycle bin and dig them out and find them, which is probably what I'll have to do after this video. But I mean, all I'm doing, I'll just review this part of it because I forgot it and I'm on it right now. But all I'm doing here is basically just comparing the pre-market approach, right? And I'm doing the same thing at the end of the session, except this time I'm going through the charts and I'm annotating either why my approach that day was incorrect or wrong, or why my approach that day was correct. Why was it right? Why price delivered what I was actually looking for. Now, this is the most important part. If you want to get extremely good at bias, as I am working at becoming, then this is what you have to do. You have to follow this process of noting and annotating what you're looking for on the charts, pre-market, top down, weekly to the 15-minute, and then when the market closes, do the same thing weekly, except this time down to the 1 minute, getting in all the intricate details and explaining to yourself either why you got it right that session or why you got it wrong that session. And I'm doing the same process, right? It's the same thing that I explained to you earlier from the pre-market process. The same thing. My annotations that are the light red is going to be higher time frame narrative. I'm doing this on the weekly and the daily. The things that I'm annotating in gray are just going to be other things that I'm pointing out that I think are important or salient. And then the annotations in the light blue are going to be what I am noting as the draw on liquidity. The annotations in the dark blue are going to be what I'm annotating as a point of interest or an area for the market to frame a reversal. So I believe I got their approach incorrect on this day, right? Bullish, incorrect. So this is another thing in the process that I do is at the end of each trading day, I will come back and label. I guess I've been slacking this on this as well. So not setting a good example right here. I have a few days kind of mislabeled, but this is what I do at the end of each trading session. I tag each day in my daily journal in TradeZella on what my bias was for that day and if I got it right or if I got it wrong. This allows me to easily filter out the days where I'm getting the bias correct so I can go back and study, do a group collective study of all the days where I'm getting it right and figure out why I'm getting it right, and then do the same thing for the opposite. Group all the days where I'm getting it wrong and study why am I getting it wrong, and then the contrast between the two is what allows me to formulate a process that is repeatable that I can follow to frame high probability bias, which is how I've literally created this and the mirror board, right? This is literally how I've learned all of this and how I'm establishing my market approach, because market approach is the first step. If you don't know where the market's going, if you don't have a bias for the day, then you're lost and you're confused. And how are you supposed to take any trade with confidence and conviction if you don't know if the market's going to go up or down that day? That's the first step. So I'm marking what my bias was, if it was correct or incorrect. The setup that I was looking for that day, the playbook that I was, no. This tag right here is the playbook that actually played out for that day. So now I can go back here and just click on any of these and find all the trading days where this setup was presented, or this setup was presented, or my bearish premium gap opening setup was presented, or my bearish discount gap opening setup was presented. I can easily go back and click on all these days and study them and know what the market criteria is like when this kind of playbook, when this kind of move is presented, right? And then this is something else new that I added. I haven't really used it too much yet, but I like to grade the trading day, like based on how I felt and based on how the conditions were, how my performance was. I'll give it a grade at the end of the session. Now this was a C day, probably because it was a fairly large losing day. But if I go to my Miro board, this is something that I want to implement, right? So on the A days, those are the days that I want to be scaling up. B days are my default days, and C days are the days I want to be scaling down. So that's why I started implementing this grading system to kind of get an idea of what are the days I should be scaling up on, what are the days I should hold the same amount of risk and just be comfortable where I'm at, and what are the days I should be scaling back. So I kind of went on a tangent there away from the post-market process. So I'm going to make this full screen again and I'll get back into it. I'm going to use this example because it has the screenshots. But what I'm going to ask myself is, was my bias correct? Okay. This is important. This is essential for framing your market approach and getting good at how you analyze price and what exactly you're looking for when you come to the market every single day in the morning session. Was my bias correct? Well, in this case, my bias was incorrect because I certainly favored the idea of a sell side low resistance liquidity run and remove the perfectly good bias I already established for higher prices. So was my bias incorrect? I'm explaining why I got it incorrect. If you're not doing this, how are you going to get better? I'm stressing this throughout the entire video because, I mean, seriously, if you're not reflecting on where you're going wrong, how are you going to know where you need to go right? Or how are you going to eliminate the things that keep making you get the bias incorrect? How are you going to improve? How are you going to get better? So was my draw on liquidity correct? That's the second thing I'm going to ask. Was my bias correct for the day? Did I get the overall direction of the daily candle correct? Second, was my draw on liquidity correct? Meaning, was the level that I was looking for the market to deliver, did it actually deliver? Well, in this case, it did not. So why didn't it do it? Why didn't it do it? Ask yourself this. If you get something else, if you get something wrong, and this goes for any part of the process, any step of the process, you have to ask yourself why. Why? Why did you get it wrong? Learn from it. And then what actually happened. So what I was thinking is these first two, right? Versus what actually happened. So I'm taking these, putting them in contrast against what actually happened. Sometimes I get it right. Sometimes I get it spot on. Sometimes I don't. So this is what actually happened. just reflecting on that. And then, so that's under the category of my approach versus what happened. And then the second part is what I plan to do versus how I executed on that. So what I plan to do was basically just what I was looking for the day, right? The playbook that I was looking for, which is all taken from the pre-market approach. The post-market analysis is simply going back to your pre-market approach and reviewing everything and seeing if you got it wrong or got it right. Why did you get it right or why did you get it wrong? That's it. Very simple process. Now, all this does not take a lot of time either. It's literally just maybe an hour at max, including your trade review. But this is what's going to move the needle. This is going to allow you to connect the dots. So what I plan to do versus how I execute on it, this is going to be a reflection on were you able to follow through with your plan? And were you able to execute on that setup that you were looking for that trading day? This is it right here. So what I plan to do for the day, right? Versus how I actually executed on it. So I plan to be a seller looking for negative PGO. How do I know that? Because I've recorded my pre-market plan because it's a part of my process. And how did I execute on it? Well, I didn't really have any confirmation because I was eager to execute the sell idea in the first 5-minute candle to not confirm lower prices. So I'm noting on where I went wrong in my execution, right? Essential. And then the last thing is what did I miss and what did I get? This is important on days where I miss setups. It's not essential all the time, but I'm still going to do it on a day-to-day basis. Because obviously on the days where I got the bias right and the market delivered what I was looking for, and I executed on that well, I don't miss anything. So I just simply write down, I missed nothing. And then what I got is basically what I got for the day. What was the actual outcome for the day? What did I miss versus what the actual outcome was? What was my actual outcome? So I didn't miss anything because there's literally nothing to do this session. Okay, cool. But what did I end up getting instead? One small loss. So even right here, I can do this little contrast between the two. There was nothing to do for the session, but I still ended up with one small loss. So you can kind of go back and figure out literally from just these last two bullet points where I went wrong and where I went right. So repeating these processes, it's a 1, 2, 3 from pre-market to intraday to post-market, doing a reflection, and then comparing your pre-market plan versus how the market actually delivered that trading day. And this is the process that produces your trade data. If we go back to stages 1 through 5, this is your process. So now I've showed you my process that I'm doing on a day-to-day basis, the manual work that I'm putting in to produce trade data, And then of course, after that, you're going to review. So this is how you review and keep a record of what's going on. If you never do this, you are never learning. This is it, folks. This is it. This is the process. If you repeat this over and over and over again, you will arrive at your playbooks, at your setups, at your model, at the way you approach the market, at how you read the market by default without even having to try. Because you do the process. I didn't start doing this until recently. I didn't start doing this until I came across this video, which was in the middle of the summer, probably, I think it was in June when I came across this video. And this guy has made over $10 million trading the market. If somebody has made over $10 million trading in the market, they have the track record for me to trust them that they're probably giving me the right information that I need to make money in the market. So I'm going to do what he's telling me to do. I'm going to get off my high horse. I'm going to kill my eagle. And I'm just going to drop everything and listen to this guy. Destroy every preconceived notion about what I should be doing. This guy has literally laid out a process for you to follow, and I'm doing it, and I'm getting results from it. My trading has only improved over time as a result of this process. Let's look at the last 3 months of my trading from following this process. I'm not even a losing trader anymore. Sure, I'm break even right now, but I'm on my way out, and I know that because I consistently get better over time. I was able to get back in there and have the confidence to attempt an eval for the first time in 3 months because I felt I was ready. I felt the confidence that I had only because I got good at repeating my process. This week right here, At the end of this week, I finally decided that it is time for me to go ahead and attempt an eval. Why was I ready to attempt an eval? Because I felt confident in my ability to repeat my process. I finally came to the awareness and the realization that I do have a process that I repeat, and so long as I repeat it, I can make money in the long run. It's literally coming to the market and doing the same thing day in, day out, and that's it. That's it. That's it. And a huge part of that, and a huge part of learning what that is for you, is going to come from everything that I just explained to you in this video. This right here. 1, 2, 3. Can you do that? Can you just do that? Because I guarantee you, you are going to see results for yourself and for your trading. Because I'm only getting better from the time that I implemented this process. And it's quite literally that simple. It's literally that. Like I'm only getting better because of this. Because of this. When I say in my videos I literally get better by default, it's because I do this, and it's because I'm confident in the process that I've established. Everything that I've done and how I've been able to build all this as a system, as a trading system, is because I do this very thing right here. That's it. So this video is 40 minutes long, so it's literally going to be the longest video that I've ever made. So I'm going to cut it off here because I guarantee that only 2 people are actually going to make it to the end of this video. If you made it to the end of this video, let me know. Let me know. I would sincerely appreciate it because I just put 40 minutes of my time to explain to you my process, which I would love to do anyways, because my sole intention of this YouTube channel is just to help other traders become a better trader themselves, so we can all change our lives, so we can all realize the success that we're working for. That is the intention behind this channel. So hopefully from this video, you have realized how important it is for you to create your own process and partake in your own process and just do the same thing every day to get better by default. It's not hard. I'm telling you, it's not hard. Let me rephrase that. It is hard, but guess what? It's worth doing. It's worth doing. Do you want your freedom? Do you want trading to give you the freedom that you're desiring, that you're longing for? Then do the work that it takes in order to get there. That's it.